How to check if your payslip is wrong, explained simply. Most people never check their payslip beyond glancing at the take-home figure. But payslip errors are more common than many people realize, and they can cost you money every single month without you ever noticing. Knowing what to look for, and how to spot a problem, is one of the most valuable things you can do for your finances. The first thing to check is your tax code. For most standard employees, this should be 1257L. If your code shows BR, 0T or a K code, it is worth understanding why, as these can significantly affect how much tax is deducted. If you are unsure, check your personal tax account at gov.uk with HM Revenue and Customs. Your gross pay is your total pay before any deductions. Check that it matches your contracted salary, or your expected pay, including any overtime or bonus for that month. If your gross pay is lower than expected, it may be a payroll error, or a deduction you were not aware of. Either way, it is worth querying with your employer. Look at the income tax figure on your payslip and cross-check it using the simple estimation method, taxable income multiplied by 20% divided by 12. If the figure is significantly higher than your estimate, it could indicate a wrong tax code, a cumulative adjustment, or an error. A slightly different figure is normal. A large unexplained difference is worth investigating. Check the national insurance figure on your payslip. On earnings between the monthly threshold of £1,048 and the upper threshold, you should be paying 8% on earnings above that figure. If your national insurance deduction looks significantly higher or lower than expected, ask your employer's payroll team to explain. Look through all the deductions on your payslip carefully. Are there any you do not recognize? Common legitimate deductions include pension contributions, student loan repayments, and salary sacrifice arrangements. If a deduction appears that you did not authorize and cannot identify, always query it in writing with your employer. This is useful when your take-home pay changes unexpectedly, when you start a new job and receive your first payslip, when you receive a pay rise and want to check the deductions look right, or when you see an unfamiliar deduction or an unusually high tax figure. A common mistake is assuming your employer always gets payslips right. Most of the time they do, but payroll is processed by humans and systems that can make mistakes. The only person who is always in a position to notice an error on your payslip is you, because only you know your full circumstances and what you have authorized. To recap, check your tax code, confirm your gross pay, cross-check your income tax and national insurance figures, and look for any deductions you do not recognize. If something does not look right, query it with your employer first and HMRC if needed. Thank you for watching. Subscribe for more everyday money explained simply.